All right, welcome back for the episode of Carnivore Trade. Today is Thursday, October 26, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today. So markets here taking a pretty good hit, although we are decently off the lows. Spiders here are down about 70 basis points. Triple Q's down 1 1/3, and the Dow down 30. IWM is positive here, so that is acting well, acting much better. And again, when the KREs break green, you're going to see the IWM green. It's just usually how it works. When they made this, when they made the IWM up, yes, about 20% banks, but at the time the KRE had a beta negative than the SPY, and now it trades like a tech stock because of the recent volatility. So this moves the IWM very fast. Why is this up today? Well, there's lots of dispersion out there, as I've talked about quite a bit over the past. And what I mean by that is the indexes are pinned. The VIX is kind of pinned here. And if something's up, something else has to be down. What's down today? Big tech, triple Q's taking the worst of it. And so you're kind of seeing that rollover trade. There's also, potentially had some conversations earlier, on Twitter with Mayhem. You guys know him, and we talked about this. But there's also, right, these guys are over leveraged in big tech. These guys are over leveraged in names like Google, Microsoft, Tesla. You get the idea. Tesla there, Nvidia. These are all taking haircuts. So what do you do when you're over leveraged there? You cover your small cap short. Stocks like Chewy up 6% today, right? With the spiders down. That's not normally what we're accustomed to. The KRE green, home builders green. This is something of a hedge against interest rates being short the home builders. TLT, everybody short bonds, right? So TLT getting a bit here, actually working on a higher low. We'll talk about bonds in a minute, but just an interesting dynamic there. Something to keep an eye on. Now, as far as the technicals are concerned, we do have Amazon reporting after the bell. I will not be able to cover that. I'll be covering that in the live stream for members, as always, on Thursday, so we'll go over that in real time. For Amazon, though, you are coming into that 200. My problem with it is, again, kind of like the Qs. You don't have a lot of support here on the weekly. You're trying to hold this previous pivot here, but on the run up, there wasn't any support built. So, God forbid they missed that report. I don't see anything really till like 110. But, it could go either way here. Market's trying to, it's getting a little oversold. The SPX, I talked about this earlier today, we weren't really stretched, right? So if you take a look at, and of course this was at like 10 o'clock in the morning, but if you look at, just take a line here to the 20 MA, that was stretched there. But really, even right here, we're still, just barely getting to that point. But, at 10 o'clock in the morning, we were only at 41.50, right? So, we're just now getting a little stretched. So maybe that can, regardless of what the earnings are, maybe it gets a bid. I think that's kind of what happened with the futures this morning. We had a really hot GDP print, but we caught a bid off that anyway, right? So we just kind of had some declining, RSI starting to diverge there on the if we pull up an hourly, you can see it very oversold, and it started to bottom there. So that gave you that, that bid, short covering and whatnot. And again, here on the, we can look on the daily, it's minor little divergence there as well. So again, it's getting oversold, and generally that can be a bounce. Now, is this a low? Well, we're not sure yet. We did slice that pivot. I talked about this, divergent low kind of setup there, 1, 2, 3, and we are into a lot of support, right? We came into a good area. The problem is when you have a big box like this, and it can draw it in here, literally a box, like a rectangle, the low could be right here. The low could be, this pivot. We could go all the way down here. There's nothing to say that doesn't happen. We do have PCE tomorrow, so that's going to be market moving. And then, of course, we have the FOMC next week. So, again, we'll see. Flipping back over to the SPX, there's nothing to say we don't rally up to the 200 and then go back down, and test these pivots down here. That is certainly a possibility that needs to be considered. But right now, markets are coming off the lows. And it looks like we've stabilized a little bit here. Honestly, if you're a bear, you don't want us to be down big tomorrow. You want to actually, have some consolidation or some type of a sideways to up move, regardless. But in any case, market's coming in here. Now we got to talk about the Qs because that is the center of attention right now. That's what's getting hit the most. And at this point, you know, you close down here at the end of the week, that whole cup and handle theory that we've been hearing about for 3 months, that gets a lot weaker. Additionally, I mean, at this point, look how close we are to that 200. I think that gets tested at some point. There is support there additionally. If we go back and you can just take a simple fib here, there's your 382, right in that 337, 339 area. So I you know, if we could bounce up to this trend line here and roll over, you know, that would be an interesting opportunity there. A pierce to the 200 on the Qs. I think you definitely get a bounce there, a tradable bounce for sure. As you guys know, however, you know, on the weekly, that's where I don't like it, right? So just no support here on the way up. And if we, you know, if this pattern does in fact break down, I mean, we can go to 320 pretty quickly. So that's something to keep in, you know, keep an eye on here. You know, if we look at the SPX, you know, for fibs, again, that would coincide here with, you know, 40-50, and not coincidentally, that's those pivots there. So there is a chance we could bounce up and make one more low. We'll have to see. Again, we're going into the Fed here, but those are levels I'm watching. By the way, NQ. Look at that. So that is that's going to be your line in the sand tomorrow. If I'm assuming we bounce up, we do have a little gap there on the NQ. But if we bounce up, you know, that's kind of your line in the sand. And again, it kind of obviously it coincides with this down sloping level on the Qs. But we'll see. Markets are a little oversold though. Anyways, IWM here, we talked about a little bit. I still don't see a bottom for this yet. Doesn't mean it can't be one, but I just don't see it right now. Again, what did we do today? We gapped up. You know you know how I feel about that. Doesn't mean we can't bounce up to 170. But this is just not a great pattern. You know, you do have the double bottom. It's trying to get a bid off of that essentially. But I'm still not in love with the Russell here. But again, nothing goes down in a straight line forever. Diamond here down 1/3%. That did make a lower low. I think that's got to go to 325. Perhaps it doesn't do it all at once in a straight line, but I do think it does get down there eventually. SMH, that's actually flat on the day. We did test the 200, so no surprise that it's getting a bounce off that. We actually gapped up on the semis, came down, and then we bottomed with everything else in the middle of the day. But holding that 200 period moving average, you definitely don't want to see a close below that, especially on a weekly. If we take that out, you guys know where we're going. So right into this area here and fill in that NVIDIA gap. Speaking of NVIDIA, down 2.5. That is below the head and shoulder neckline. If I had to bet, if you gun to my head, I'm going to say they save it tomorrow on the weekly. That's just the way it goes. But I will say, you did back test that 20-week moving average, and you came back in pretty nicely. So we'll watch that. The other bet I would make is that they'll close it right on there. So maybe like 416.50, just to confuse everybody. But really, to me, the weekly level is 403.11. You close below that, that's a fat air pocket that's going to get opened. Yeah, there will be a level here at 360, 200 moving average, but that's going to be a magnet at some point. IGV here, so down 70 basis points. Again, flirting with that pivot. That's got to get saved by tomorrow. Again, my guess is they do it, but definitely breaking that wedge. We can get rid of this trend line that's been violated too many times. Breaking that wedge here, we'll see if they save it on a weekly. If not, we're going down to 315, possibly 305. Again, you do have the 200 MA in that vicinity as well. Transports cannot get out of their own way. Still a lot of support, you know, looking at like say 13.5. We did slice 14,000. And you are going into this little belly here. Very oversold, very beaten down. It does need to have a bounce at some point, but still down 1.25. What's interesting is the Jets are actually getting a bid here, and I'm underwater on some calls myself here, but you are going into that little double bottom. Maybe that can, you know, help the transports out tomorrow if we can get some type of a bounce there. But DJT still can't get out of its own way. I do like this support though at 13.5. Take a look at that 200-week moving average right there, and if we just take a fib from the low, you're going to see we're right into a 618 So transports out a shot here, but you know, they're just getting slammed at the moment. All right, let's get over here to interest rates. So let's start off with the 2-year as always. There we go. Rates coming in a little bit. I know Yellen was kind of barking them down in the middle of the day a little bit, talking up the soft landing and all that stuff. But 2-year down 7 basis points to 5.05. It's still holding trend, no real problems here, but it is backing off. Same thing with the 5. Now the 10s and 30s, I think this looks poised for some type of a pullback here, especially the 30. But 30-year down just about 9 basis points. And I'm going to use, I like looking at the ZB a little bit more. That to me looks like it wants to put in a higher low here. It's got that set up. Take a look, right? So take a look at the time between these pivots. You got like 2-3 weeks, 2-3 weeks. You got a month here. And then this pivot was after about a week and a half. And now you're already attempting a higher low. That signals seller exhaustion. Take a look at the RSI. That's starting to really diverge pretty hard on all time frames here. And this is the long bond too. Talked about this a minute, early in the video. If big tech's getting slammed and you're levered to the tits on Apple, but you're also short bonds, what do you got to do? You got to cover, right? You don't want to get margin called. So you're taking profits on this and, using that to get out of Apple. It's certainly a theory. It also could just simply be that the market's finally seeing a slowdown in the future, and maybe it's calling a risk off here, right? Higher low potentially on ZB on the 30-year. If you guys follow TLT, that's TLT right there. Higher low potentially. What do we have on the spiders? Lower lows, right? XLU, higher high. Okay, so something might be talking to us a little bit. But right now, I think specifically the long end is due for some type of a counter trend bounce. That doesn't mean it's going to go to the moon, but I think it's definitely tradable. All right, XHB getting a bounce here up 1.3. I still think that's got to have one more dump down to 60, 68, 68.50, but it's getting a little bit of a bid here, and we'll leave it at that. Trend is down now on the home builders, so just be aware of that. But a lot of support in this range there for the XHB, so we'll just leave it there for now. We'll see what that does by the end of the week. VNQ getting a much needed bid as well, gapping higher. Don't love that. Can still go to 74, 74.50 in the near term. But again, they've defended that area on a weekly close. I told you this yesterday. Monthly close below the 200 is going to be a huge negative. We got 3 days left. Actually, not including today. So 3 days. Okay. So there you go. Anyways, XLF here, up 0.25%, but not a great pattern, right? You can make a case this is a down move and starting to put in an immature bear flag. So I told you guys 32 would be support. We got there. If this flag is above support, it can go down. So just be aware of that. But banks are getting a bounce. KRE, it's flirting with that 40 handle, right? So look at the kind of intraday, the 4 hour there. You got to get back above these moving averages, and you're kind of right on that trend line. We'll have to see where it closes tomorrow. That'll tell us a lot more. But if this starts going down here and bonds start going up, it's a signal. But it is getting a bounce today. Again, could be short covering to cover those big tech, all that leverage in big tech. Obviously, regional banks are heavily shorted. So just be aware of that. KBE up to 0.84. Nothing terrible. That's got to get through 36 still as well. KBWB coming off the lows, that's got to get through this trend line and 20 moving average. It is in a very, very weak technical position. Broker dealers getting a bid. We talked about 450 as support. There's your bounce up 2% on the day. Look for 470 to 475 here in the short run. If it makes a lower low, probably looking at like 437, 440. On to commodities and energy. Starting off with crude as always, so down 2.5. Got a nice defense yesterday, then rolled back over today a little bit. This is going on, and I'm seeing a lot of headlines about. I think there was an attack in Iraq actually today, and the market's not, and at least crude isn't really responding. You'd think that the crude would be up a lot more to that. Maybe it's looking at a slowdown again. ZB's getting a bid, bonds are getting a bid, utilities are getting a bid. Could be something to keep an eye on. But really, to me, this trend line's, it's good, but I just care about this pivot here. So 81.50. You get below that, then I think we start looking at the mid 70s there. But right now, crude just in a range, and I'm not doing anything with it. Same thing with XLE down 75 bips, holding that 100 MA though, so that could be a higher low attempt. I'm not touching it. It's all over the map. XOP also a potential higher low attempt. You don't want to lose this gap window though. Otherwise the fill is down at 45, and then the OIH here down 1%. That diamond pattern might be playing out here, but we'll have to give it one more day and see what that does by the weekly close. CCJ, that's still holding up well, back testing that 3750 area and getting a bounce off of that. Still weekly consolidation underway. Same thing with URNM. And Nat Gas, the all-star of the day, up 8.5%. So the bulls showed up, right? We talked about this support level. This is where we broke out. They should show up there. Got very oversold, and it is showing up in a big way, up 8.5. There is a contract roll coming tomorrow. That should take it up to this high pretty much. So we'll see how that does. That's just kind of how the continuous contract works. Sometimes you get these big contract gaps. But Nat Gas acting well today. Another sector, another asset that's heavily shorted. Again, I wonder, right? So, we see Apple today. We see the triple Qs. By the way, Apple, I don't like this chart. But we see these, big tech getting slammed. We're seeing some short covering other sectors. Certainly could be a thing. Anyways, let's get over to the dollar. So dollar holding up 12 cents on the day. We broke out of this little wedge. It is off the highs, though. It's got to get above 107 really to do some damage, and we stalled out at 106.89 today. Came off the highs. It's above the moving averages. We'll give it the benefit of the doubt, but you need to get above 107, and then of course this pivot. But it's hanging in there today, and again, this is up with bonds too, so just keep that in mind. But dollar is holding up. We'll leave it at that. Gold here, just flat, so nothing terrible. If this consolidates, it can go higher. I would still prefer, to swing this, I would prefer 1900, like some type of a pullback. But either way, it's hanging in there okay. And if it consolidates enough and get through that pivot, silver, same thing, although a little bit on the weaker side. Again, this is telling us that industrial demand is starting to weaken, or the market sees that at least. Certainly possible, but we're holding this trend line for right now. So we'll give it the upside bias in the short run. And then platinum here, just continuing to kind of inch higher. So you could make a case even, I'm still biased here. I'd like to see this drop one more time, but you could make a case, maybe that's kind of a micro bear flag there. So we'll see how that plays out. Got to get back above, 922 to kind of negate that on the daily, I'd say. A weekly close above, 922 would probably do it on a weekly time frame, but you're still below those moving averages on the weekly chart. So there's a shot of this having one more drop in it. And the same thing with palladium. You guys know that has not changed. Copper also, nothing's changed there. That's still got to drop one more time. Bitcoin finally having a pullback day here. So down about 1.6, but that's nothing in the grand scheme of things. Still a lot of resistance at 35. This needs to pull back before I get interested in it, but it's holding up here. And, we're very overbought in the short run. But again, this always happens, right, before some type of volatility spike. I don't know what's going on. If there's some rumblings about China and so on and so forth, who knows how much of it is true. But either way, Bitcoin having a nice run here, and we'll see what kind of levels it gives us here. I would say 31 to 32, 31.5 at least. You got to pull back to, and then maybe even 30,000. But again, it's holding up, and we'll just leave it there for now. All right, so back over to the spiders, or SPX rather. I'm going to just say we probably close right at 41.50. So that's basically right where we are right now. We'll see what we get tomorrow. I would say for bears, you just want a sideways day, maybe even a bid, and then kind of like an inverted hammer, slightly positive close. For bulls, you either want a V-shape, gap and go, or a gap down in a V-shape, or you just want this to get so stretched that it has to come back. But right now, we'll see what we get. Again, PCE tomorrow morning at 8:30. That's going to be a big deal. And then we have the Fed next week, so keep that in the back of your mind. Whatever move happens between now and then, it could get faded whenever the Fed, has their little statement. By the way, last thing I'm going to leave you with, this is a Fed pause, and this was a Fed pause. The Fed is going to pause again, and I don't think they're going to intervene in this market here until we get really bloody here. You got to remember, we're only about 9-10% away from the not the all-time high, but the year-to-date high. So don't expect them to come to the rescue right away. But again, we'll see what it looks like when we get there. So anyways, guys, going to wrap up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.